right, guys, we're back again with another episode of PFREI. I'm your host, Quantm.One. Oh, man, we got a great show today. We have Matthew Sullivan. Get equity freedom. All right, so we're going to get into your background. Let me turn my cell phone off. Make sure we don't get any disruptions. This thing's ringing. We're going to get into your background, and we're really going to share some key insights with our listeners. The whole goal of this show, Matthew, is really to try to level people up who's listening, let them know a little bit about what you're doing, talk about your journey in real estate. I know you are an active real estate player, so let's begin.
I am putty in your hands, Vigwan.
So how did you get started? And just give me a little background, let the listeners know who we're interviewing.
Well, I mean, I moved over to the US from the UK about 8 years ago, and I'd always been interested in getting involved in real estate. And so what I really decided to do when I got over here was to find a way to become actively involved. I didn't just want to be, one of those guys that was sort of fixing and flipping single houses. My background is entrepreneurial for the last 25, 30 years, spent a few years working with Sir Richard Branson. Latterly, my focus has been technology platforms and finance and pushing those two together. So when I came over here, I set up a real estate crowdfunding company hot on the heels of the Jobs Act, which really was the first time that you could publicly offer deals and private placements online without having to without having to go through the process of having a previous existing relationship. And at that point, I really what the crowdfunding platform did was enable smaller investors to get involved into real estate transactions that typically were reserved for the so-called country club set. But I stumbled across this asset class, which is the ability to invest into the equity in single-family homes where they're owner-occupied about 4 or 5 years ago. So it's an absolutely fascinating subject, the ability to be able to tap into the equity appreciation of a home without actually having to own that home. And it was a construct that was still quite rudimentary, then about sort of 5-6 years ago. But it was fascinating and intriguing, and I sort of kept it in the back of my mind. And about 4 years ago, we set up Quantm.RE because we found that we thought rather that we'd cracked the code as to how to solve the problem with funding, because one of the big issues with funding these types of programs is that it doesn't provide cash and it's a long-term investment. So we created Quantm.RE to create a capital market system to enable the home equity, or rather the equity in people's homes, to be made accessible, investable and tradable. So I've sort of answered about 4 questions in one there, I think. So.
I love it. This is actually very interesting. I love where you're going with this. But before we jump into that, because I do have some questions about that, but why are you passionate for real estate? Why real estate?
Well, real estate is really interesting because there's all sorts of different layers of real estate. I'm not terribly interested in commercial real estate and triple net leasing and large shopping malls. And what I am really interested in is homes, is residences. And there's that strange link between it being an asset and being somewhere to live. So it sort of is a double-edged sword, or it's all sorts of other third-rate metaphors that you can pick and choose to your delight. But really, it's really interesting because you live somewhere, but that somewhere is an asset, and it's appreciating, as we've seen in the last year or so, at a furious rate. So it plays a number of different roles in your life, and there are so many different players involved. There's mortgage players, and there's as you know from your own business, there's all sorts of different flavors of debt. There's different types of debt. There's good debt, there's bad debt, there's performing, non-performing. And so all of that, there's a massive infrastructure. So it's both economically, interesting. It's also from a cerebral perspective, just creating different structures that enable you to work with different parts of that particular real estate sector is, intriguing and compelling. So, and it's also very big and one could just, it's not trivial. It's the space we work in is a $23 trillion space. So it is, and continues to be a very interesting, fast-moving, developing, place to work, and long may that last.
Yeah, I love the real estate combined with the technology. I think that is helping the stimulation of the market. I was talking to my 13-year-old about the crash, and we didn't have the technology that we have now when that happened. So I think a lot of that plays a big part in carrying it forward, making it easy, like what you just mentioned, that the digital platforms for any and everybody to be able to invest with the crowdfunding, having that digital connection and be able to onboard them seamlessly and easily and give them data up reports and everything else. So I'm liking the evolution of that and where that's going. Let's get into the get freedom. Like, how does this work? What does that investment look like from someone who, they may have $100,000 in their house. The house is appreciating very rapidly, as you mentioned. Things. I just listed a property for $450 in 24 hours. It went in the contract for $500,000 on the market for one day. Turn review concluded just yesterday. Like, it's unfathomable what's happening with the market space. But how do we tap into that equity with this program that you talk about? Educate us.
Well, the first thing to really describe is what we are. So we're not lenders, we are investors. And the way that we get the return on our investment is by taking a share of the appreciation of the home when the homeowner sells it. So what we do in exchange for a lump sum is the homeowner agrees that when they sell their property, which can be any time in the next 30 years, they will give us back our original investment, and they will share a fixed percentage of the amount that the property has gone up. So that means that we make a return on our investment. It's an equity return. We're investors, so we don't lend you money because we don't get paid by charging you interest. So it's not a debt product. And what we're doing is we are simply allowing you as a homeowner to get access to your home equity without having to borrow more money. And because it's not a loan, that means you don't have any of the debt to income ratios or earnings requirements or credit score requirements that you would associate with a loan. And in your business, the non-performing note business, it's very interesting because there are people that have large amounts of equity in their home, but have non-performing loans, whether they be seconds or firsts, because they simply don't have the cash flow. They're house rich, but cash poor. And because of that, they can't service their loans. So we do work with a number of those people to access some of the equity in their homes, help them pay down or pay off their existing loans that are causing them problems. They could be credit cards, because at the same time as them accessing their capital, they're getting themselves back on their feet. They're restoring or recovering their credit position that enables them to go back and refinance at a much more competitive rate. So really what we do is we invest in the potential for the house to go up in value. We don't go on title as owners. It's an option agreement, so it sits in parallel. It doesn't trigger any due on sale clauses. And there's no tax implications when you receive the money from us. So it's a very good product for a homeowner who wants to access capital without that burden of those extra monthly payments.
Wow, that's amazing. I mean, the risk triggers are the hairs standing on the back of my neck. If you would see, I'm thinking from an investor mindset. How is my capital secured with an option agreement? There's nothing recorded. There's no mortgage. There's no security. Educate me. I'm an investor that wants to do this. How do I secure my investment?
Well, it's recorded as a lien on title. So what we have, we're not owners of the property though. So the important thing is we're not going on title as owners. So you maintain ownership of the property, and that's very important for people that own their properties outright, for example, or anyone that owns a property. You don't want someone camping out in your spare bedroom, without if you can help it. So, But this is protected, so we do record this agreement. It's similar in its language to a trust deed, but it's obviously not a loan. So it's recorded as a junior lien, so it sits behind the main lenders. And what that does is it enables us to, when the home is sold, when the liens are paid off through the escrow process, it just means that we get our money. It also means that we can protect ourselves and enforce certain parts of the contract if we want to. But obviously, we're in a very junior position. We're very much partners with the homeowner in that respect. So whatever's bad for the homeowner is bad for us, and whatever's good for the homeowner is good for us. So we tend to work very closely with the homeowners to make sure that our interests are aligned. But the important thing is, from an investor's perspective, you don't just get your percentage of the upside, you get an enlarged percentage. So in other words, for every, let's say, 10% of the value of the property that we will invest in, we don't just get 10% of the upside, we'll get 25 or 30% of the upside, depending on the agreement. So for the investor, you get rewarded for taking that extra risk of unlocking potential future value and in exchange for cash today. And so that does well. Yeah. The risks are limited as well, because effectively you're buying into the home at a discount. There's a bit of discount built in, so you're already in the money. So if the house doesn't go up or goes down in value, you've still got that cushion there. But from the homeowner's perspective, you're in a great position because you can get up to $500,000, and there are no monthly payments or any type of additional fees for 30 years, for up to 30 years.
Yeah, that's nice. Sweet, man. I see it now. The security, the option agreement is recorded, clouds the title. I'm pretty sure there's some triggers. If they don't keep their current existing mortgages current, you have the right to come in and, pay that and take over the property.
You've got it. Exactly. And again, what we don't want to do is end up losing control of the property. So as I said, what's good for the homeowner is good for us. So if they find themselves in a position where they can't meet the payments, we can step in, we can cure that, and then you can have an orderly exit where the house is sold at the full value, if that's what the homeowner needs to do, as opposed to being foreclosed on where you completely lose control and your house is sold at a discount, or you lose money that could have been on the table.
Yeah, when I think about this, I always look at it as a note business. What are the odds, right? So I'm a junior lien guy. I like buying junior liens because I can get a bigger discount. I can have an option on the first, foreclosed, subject to, so on and so forth. 40% of the loans may go bad. I may not get paid on, but it's 60% I might get paid on. So this is like probability when I look at it. What's the probability of me investing for 20, 30 years? So there had to be some historical data to say the average person refinances in 5 years. They don't keep their house for 30 years. For me to know when these triggers are going to put in and when these triggers are going to go off so I can get paid. So I'm pretty sure there was a lot of analytical data that went into this and looked at, the average person who holds their house and everything else to try to determine what's going to be Yeah.
And you're absolutely right, because there is an enormous amount of data that's available to this particular asset class, which is owner-occupied residential property. Although we do also work with rental properties and holiday lets and multifamily homes. So we're not restricted to owner occupied. But yeah, and the way the contracts are written, there has to be some downside protection. There has to be some leveraged upside, even though we're not using debt. So you get accelerated returns. But there has to be risk, because if there's no risk, then it's not an investment, it's a loan. So we have to make sure that we are actually on the hook. So if the price of the house does fall significantly, we may lose money. But over time, and time is like 5 to 7 years, house prices on average do go up faster than the rate of inflation. And because of the leverage that's built into our agreements, the investors, they're not just going to get house price appreciation, they're going to get maybe 2.5 or 3 times that. So we're looking at sort of early to mid-teens as the average return based on historical information.
Yeah, this is definitely a wealth mindset investment strategy because it's long term. It's not fix and flip. It's not it's something that we're going to put this money out there. It's a preservation of capital play. I love it.
But the other thing that we've built is an exchange. So for people who want to invest in these home equity agreements, we've created a platform that allows those agreements to be sliced and diced
I
and
love it. I
cut up
love
into
it.
little
You
pieces.
securitizing them also?
Yeah, and you can trade them, so you'll be able to buy fractions of these notes, and
I
there'll be a secondary
love it.
marketplace. So that's all built. We're rolling that out in the next few weeks. So you can go in as a small investor, and buy fractions of these. I suppose you could call them notes. They're not really notes, but
Yeah,
you get the general idea. And then as the house goes up in value over time, the return profile of the corresponding home equity agreement, that goes up as well. And so if you find that you've locked in a 10 or 15% return, you might decide that you want to sell, so you can then put your fractions or your assets up for sale in our platform. If there's a willing buyer, they'll take them off your hands, and you can then lock in your profit. So that creates momentum, liquidity, tradability for something that is ultimately not liquid, which is home equity. And finally, all of that is powered by blockchain technologies. So it means that it's very fast, it's robust, it's scalable, you can trust this technology because it retains an immutable, unchangeable record of that transaction. So we're using as you were saying at the beginning, technology, but light, thin client technologies, which means that we can achieve our objectives in a very cost-effective and scalable way.
Yeah, very sophisticated. I love it. I love it. Just the conversation and dissecting it and seeing how visually it works out is genius. It's
That's
genius.
very kind. But it's good. But the most important thing is it solves a problem. So this is not just a sort of nice to have. I mean, ultimately, for all of those millions and millions of homeowners out there who have
impact project.
Yeah, who are house rich, cash poor, who are sitting on hundreds of thousands of dollars of wealth but can't pay for the groceries or can't meet their loan or credit card obligations. This solves that problem, and we've been running this for almost 4 years, and we've invested, or through our partners, we've invested millions and millions of dollars and helped over 100 homeowners. So it really works, and there are some very happy people whose lives have been changed for the best or for better by being able to tap into ultimately something that is theirs in the first place.
Yeah, it's a win-win. That's what gets me so excited when I hear about or have these conversations where the homeowner is winning and the investor is winning, right?
Exactly.
It's a
Yes.
true win-win situation. And that's why I got into the note business, because I felt as though I can have the control that the banks had and give the borrow a reprieve and create a win-win situation.
Well, yeah, in your business, every note has a story. There's, everyone's different. Everything has a story.
This is huge for the note business, by the way, Matthew. I don't know if you guys are already, but connecting with note investors and creating.
Yeah, no, we are.
Because right?
I mean, for note investors, I mean, what we can do is we can access capital that's already there, that's not additional debt capital, but that capital can be used to pay off a note. So you might have a note that's been sitting there that's non-performing, where the owner is struggling to meet the payments. If we can access enough capital from their equity to pay off that note, then if you're buying these notes at a significant discount to face value and you're paying them off at or near face value, then you're going to lock in a really good profit. And at the same time, you're going to have a very happy homeowner, because that's off their shoulders and there's no additional payment to make. So it's not like you're replacing one payment with another. You are literally solving that problem for them by using the equity that's been built up. And particularly over the last year, some homes have skyrocketed in value. So there's an enormous amount of wealth that these homeowners simply cannot get their hands on because they won't qualify for traditional loans, HELOCs, or refinancing. But working with us, they can tap into that. And that means that you can then get your notes performing or paid off. That gives you your capital back that you can reallocate. And you have a homeowner that's there with a payment that's been paid off, and an agreement that they haven't got to worry about for 30 years. And ultimately, we only get paid if their house goes up in value, so it doesn't eat into their existing property. They can buy the agreement back at any point. It helps them get on their feet. So there's all sorts of good things. And ultimately, all we're doing is we're giving them access to something they already own. and there's no magic in it really.
That's awesome, man. Matthew Sullivan from QuantmRE. I hope you guys enjoyed this podcast. Get Equity Freedom. Go check out the website. It was another great episode of PFREI. Be sure to check us out on all the social media platforms and all the podcasts. Oh man, this was a wealth of information today, Matthew. I really appreciate it. I'm feeling.
Thank you for having me on.
Every time I learn something new, I just get excited. This is great. This is different. This is what they say, the red ocean. Everybody's in the blue ocean. This is definitely red ocean talk. So appreciate it.
Wonderful. Thank you for having me on. It's been a real pleasure.
Absolutely. Absolutely.